All right, so it's a big day today. Everyone, and I mean everybody and their mother, has been talking about inflation and the CPI readings that we are going to get today. Pretty much, you can't avoid it on financial media, and you can't avoid it on this video either. So, we're going to be talking about inflation and how it will impact commodities. Now, you may be thinking, well, shouldn't it have impacted commodities by now? I mean, but the last few months we've been getting these really hot CPI numbers, yet commodities such as precious metals have been kind of peaking up a bit, but not really anything to write home about. Oil has been trying to peak up a bit, but it's still kind of lagging a bit. Bitcoin, for example, got up to about 50,000, a little bit higher than that, and now it's kind of dragging a bit. So what exactly is going on, and why is it taking so long for the CPI and inflation to really show up in prices? Now, I'm going to talk about that somewhere in the halfway mark of this video. But generally speaking, I believe that one of the largest weightings in the CPI index will be one of the reasons why we will continue to see large or somewhat elevated levels of CPI in the near future. Now, you may be asking, well, what is this weighting? It's called owner's equivalent rent. Now, for those of you who don't know, owner's equivalent rent is essentially a survey that's done, asked of home buyers, and basically they say, hey, what do you expect if you were to rent out your home? What do you expect rental prices to be? What would you accept as a rental price now that you've bought your home? And obviously you would guess that if someone is buying a home at a very high price, they're likely going to say, well, my rent should be higher. I paid this amount of money. I want my rent to kind of cover that cost. And that's what generally happens. However, just like how you would assume, in order to get these numbers reported, you have to first take or do the survey, report the numbers, then post it. That usually lags the home price numbers that we usually get. So that's one of the reasons why we see a lag of owner's equivalent rent, which again is one of the largest weightings in CPI. That's why we get a lag there after we get the prices for the Schiller Home Price Index, and that's why that kind of runs ahead. So over the course of the last couple of months, we've been seeing Schiller Home Price Indexes basically breaking records. It's been insane. And I've been on this channel time and time again, pounding the pavement, almost like an old man shaking his hand at the sky almost saying the sky is falling, but I'm not saying the sky is falling. I'm just basically saying I don't think inflation is transitory. I have no idea why the Fed keeps saying this, because there's this glaring metric here that no one seems to be addressing except for those who are inflation nerds or those who happen to be, precious metals nerds, for example, like myself. However, we're starting to see more and more people say that, hey, maybe inflation will persist longer than what we had originally anticipated. Yet I have yet to see the Fed say such a thing, because unfortunately, and I kind of feel bad for the Fed, I think their hands are a bit tied. They're tied nationally, and they're also tied internationally. Speaking of which, internationally, we have groups like the IMF, International Monetary Fund, who are very sensitive to emerging markets. And they know if the dollar rises from any tapering or any raising of the federal funds rate, they know that these emerging markets who may have dollar-denominated debt or need dollars to kind of engage in or kind of keep their economy going, if they get the dollar, it's going to cost them a lot more in their currency than it did prior to the Federal Reserve raising rates or tapering. So the IMF is very sensitive and basically saying, hey, if you are going to taper United States, please let us know. So the Fed is stuck on that end, because if they start tapering, it may be an issue for emerging markets, some of whom we actually do business with. So it would then hurt us as well. On the national side, we also have issues with the idea of tapering, because we're still dealing with the doldrums of Delta. bond yields have basically reverted from where they were heading, which was to the north. And we've been seeing the dollar rise a little bit in response to that as well, kind of having a little bit of a rally here in response to this. So if the Fed decides to, decides to, hey, let's, start tapering here and maybe let's start raising rates here while we've yet to really get out of this recovery, and we may need a bit more of this easy money to see us through, especially during these times of what I like to call the Delta doldrums. That may be a negative sentiment that the markets may not want to have just yet, this early, just yet. So nationally, the Fed is stuck. Internationally, the Fed is stuck. But inflation is here, whether we like it or not. And again, in my view, I think it will last longer than what we think it will, because we have yet to see owner's equivalent rent really show up in CPI. In fact, owner's equivalent rent is actually currently below its pre-2020 levels. So we've really yet to see what can possibly happen with inflation once we start to see these numbers really elevate. Now, let's start to talk about the impact of inflation on commodities, because you may say, well, how should we view this coming rising inflation in lieu of commodities? Well, we can take a look at precious metals, for example. I'm looking at my computer screen here, and I actually ran a correlation going all the way back month over month between gold and CPI. And this goes all the way back to September of 2000. And basically, all of this data shows that there's a positive, strong correlation. Specifically, for those quant nerds out there, a 0.896 correlation. Now, even if those of you aren't quant nerds, if you want to know the range that correlation usually sits, it's between -1 and +1. So 0.896 is pretty close to +1. It's a very strong correlation. So as CPI rises, we should expect gold to rise as well. Same thing with silver, except it's a little bit more moderate. It's positive, but moderate. And its correlation is 0.631. So not as strong, but still positive. So same thing, we should expect silver to rise while CPI is rising. Now you may be saying, whoa, TJ, CPI has been rising, gold and silver has kind of been lagging. What's been going on here? And this is essentially what leads me to one of the metrics that we've really yet to see reflect those really strong inflation expectations based off of a coming economic recovery. And that is the 10-2 yield curve. And essentially, the 10-2 yield curve, when it steepens to the upside, it basically says, hey, look, the spread between the 10-year yield and the 2-year yield is beginning to widen. And as it increases to the north side, we should expect an economic recovery, and we should also expect some inflation to come along with that naturally, just as a byproduct. Now, where is the 10-2 currently? Currently, the 10-2 is actually kind of mean reverting a little bit, but it fell off a cliff, basically going back as far as March. So from March up until about, let's see, what does this say here? Up until about the end of July, it's starting to make a little bit of a bounce up in August, but basically going into July, it crashed, and or I shouldn't say crashed, but it mean reverted pretty aggressively. Now, what we need to see is for it to really recover back to the north side. Once we start to see that, then we should start to expect gold and silver prices and other commodities to really start taking off again. And I do think the catalyst behind that will be Delta. And currently looking at the United States, it looks like we did hit a peak for Delta cases back at the beginning of September. Basically, it looks like since the beginning of September, we've been on a decline in Delta cases, which is good to see. But Who knows? It could be just taking a breather. It may go back up again. We don't know. There might be another variant coming out, and there may be another close here of the economy. We don't know. But what I do know, or what I do assume, is that once we start to see those cases really come down, then we should expect commodities to really take a note from the CPI and start bouncing up to the upside, as they had been doing, or as they were doing earlier on in the year. So guys, let me know what you think about this in the comment section below. Thanks again for watching. It's been Investing with TJ. Check out my website, goldandsilvertoday.com, and also hit that subscribe button down below if you want to get more updates on the market.